Hey there YouTube. So in this video I wanted to cover the IRS CP10 notice. This is a very common notice that goes out after taxpayers file their Form 1040s. The notice is basically bringing to your attention that the IRS has adjusted the amount of tax refund or credit roll forward that you will be getting on your tax return. It's a notice that automatically goes out, and it's mostly attributed to taxpayers basically incorrectly reporting how much tax credits they have, or how much in estimated payments they had, or in federal income tax withholding. So the best way to kind of cover this is look at an example here. So we have John here. He's a single filing taxpayer, makes $100,000 a year from his W-2 job, and then he has a rental property that does $20,000 per year net income. So because he has this extra income, he makes estimated tax payments during the year to cover that extra tax liability on the $20K. So he believes that based on $20K in income, he's going to owe an extra $4,000. So John decides he's going to make estimated tax payments totaling $4,000 during the 2020 tax year. So those are the payments that he made. Now on his Form 1040, instead of reporting $4,000, he mistakenly told his tax preparer that he made $5,000 in payments, right? So he's telling his tax preparer inadvertently, and honest mistakes do happen, that he made $5,000 in payments when he actually only made $4,000. So he's overstated his estimated tax payments by $1,000. Now, when John files his tax return, in this example, he owed $20,000 in tax in total, so he had $20,000 in federal withholding, and then he reported $5,000 in estimated tax payments. So when John looks at his Form 1040 and files it, it shows that he gets a tax refund of $4,976, which he just wants to roll forward to the next year, right? So he doesn't want the refund check, he wants it just to be applied to the subsequent tax year. Very common approach. It helps minimize the amount of estimated payments you got to make in the following year. Okay, so $4,976, that's what's shown on his return. Now here's the problem. He computed the total taxes correctly, right? He owes $20,024 in tax, but again, he messed up on the estimated payments. He only made $4K of estimated payments rather than the $5 that was reflected on the return. So instead of receiving a tax credit roll forward of $4,976, he should only get a credit roll forward of $3,976 because he overstated his estimates by $1,000. Now, the IRS system, when he files his 1040, generally it will automatically catch this, right? It's going to match up the amount of estimates reported on the return versus what was actually paid. And so when it sees that discrepancy, it makes an automatic change, and then it sends out this CP10 notice to let John know, hey, look, we have information that says you only paid $4,000, you reported $5,000, so we're adjusting your credit roll forward by this amount, right? Now, sometimes those do get sent out in error, right? I mean, if John did in fact make all of those estimated payments that were reflected, you can reply to the CP10 notice, contact the IRS, talk to them on the phone, and try to figure out what happened. But for the most part, when these notices go out, they are accurate, right? The system does do a fairly decent job at checking how much estimated payments were made, and so if there are discrepancies, they will automatically adjust it and send you the notice. So that covers it for this video. I hope that was helpful to clarify what these CP10 notices are. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.